Welcome back. Well, coming from 2022, many described it as a challenging year for retail and institutional investors. Coming into 2023, interest rates were already on the rise. Inflation was at all-time highs in most economies. And 2023, as it comes to an end, now let's take stock of how investors fared and get an outlook for 2024. Joining us for this conversation is Mr. Ayodeji Ebo, MD, Optimus by Afrinvest. Joining me via Zoom. Great to have you on the show. Good morning.
Yeah, good morning, laddie. It's great to be here.
Fantastic. So I remember in 2022, coming into 2023, most investment advisors expected investors would stay away from the equities market, with 2023, being an election year. But the NGX All-Share Index is up over 40% year to date. Help us understand this dynamic.
Okay, thank you very much. If we cast our mind back, we would recall that coming into 2024 was an election year, and the election was really very keenly contested. And as a result, that impacted on the expectation of the investors. So we saw significant sell down on most of the stocks, and the stock market last year was really down. But we saw that one of the critical factors that we know that have improved the performance of participation in the market is also the smooth transition. Yes, there are a lot of controversies, but having a smooth transition to another regime was really very important. And some of the major announcements that came in early, like the removal of fuel subsidy, immediately impacted on the oil and gas sector. Yes, there's a bit of reversal in that space now. Also, on the FX policy, also boosts a lot of confidence. Yes, there are also concern in that space. But when you look at it holistically, there was a bit of repositioning of the equities market based on policy announcements, based on policy decisions. And it's good to also put it into perspective that the retail investors continue to be the major drivers. Based on the NSC data as of September, the retail or the domestic investors rather accounted for about 90.5% of total activity relative to foreign investors. And when you also break that down, when you look at the retail investor, invested almost about 850 billion relative to about 500 billion last year. That is still as of September, which means they may double that. That's 2x. You also look at the domestic institutional investors, also invested about 1.6 trillion so far as of September, relative to 1 trillion last year. So that strength or that renewed interest from retail investors sustained that bull run that we're seeing, and that is responsible for the performances that we're seeing in the equities market. It's good to note that the foreign investors are still staying on the sideline relative to about 160 billion naira traded last year. They've only traded just about 108 billion naira this year as of September. So which means that the policies or the confidence is only rubbing off on domestic investors, but the foreign investors are still staying on the sideline, maybe given some of the uncertainty around the FX environment.
All right, Mr. Ebo, but if you put up that slide for me again, looking at how the NGX All-Share Index has grown, if you put up that slide, if you look at the January, when we started trading for the year 2023, we see we're at 51,222 points. But if you run down to June, you see that that's where the action started. We got about 60,968 points for the All-Share Index. Can we just say this rally was driven, or was an election rally, or Tinubu as some have described it?
Yes, we can say, yeah, you are right. We can say it's the President Tinubu's effect. Given some of the immediate policies, you would know that some of those immediate announcements set a bit of strong pace and confidence in the economy at the beginning. So that was also responsible. And you also look at how some of those policies in terms of the movement in FX had also impacted on the banks. Yes, it was is two ways. For some of the manufacturing sector, you see a lot of them shareholders fund underwater. But for the banking sector, they were able to book a lot of FX gains, which was a major boost. And that is part of what is responsible for the gains we are seeing in the banking sector. You look at it year to date, they gained close to about 60%. Some stocks have gained over 120% in the last year. So policy is key. Performance, financial performance, these are variables or factors that drive performances on the stock exchange.
And looking at the macros now, we got that hot inflation data on Friday, seeing that inflation hit a multi-decade high of 28.20%. We're also seeing currency devaluation. The naira is pressured, at this time. Which investors would you say were able to manage, in 2023? Look at the official numbers there for the exchange rates, 458 all the way to 896. Now, I did touch about 1,000 in the official market. Which investors were able to beat inflation and currency devaluation in 2023?
Okay, thank you. The first, if we're going to rank them, I would say for the equity investors, for those that were able to take the risk or benefited from it, the banking sector gained close to 60%. You look at the oil and gas sector, gained over 100%. That's oil and gas sector index has gained over 100%. And so, for those that are invested in the equities market earlier this year, would be the winner based on asset class. Then you come down to the for those that are invested in dollar-denominated assets, which was one of our strong recommendation earlier this year. So you would see based on you spoke about the official market, but it's not until recently most investors access dollar through the unofficial market to invest. And looking at that, it opened about 776 naira to a dollar this year, and currently at 1,230 naira to a dollar, which is about 40% depreciation. That's when you look at that, that would translate into about close to about 70% improvement in their investment. So that's also positive for them. And for those that are less risk averse, we would see that for those that were able to invest more in commercial paper, would have also tried to bridge that impact of inflation, like you mentioned earlier. Inflation based on the last report at 28.2%. So for investors that were willing to invest in CPs, commercial papers, so would have still benefited rather than staying with treasury bills, which we know is government backed. So by and large, I think investors, those that are willing to invest or take a bit of risk this year, benefited from their actions rather than leaving the funds idle in their bank accounts.
Talking about the naira's weakness to the dollar and dollar denominated assets at this time, we're all trying to relieve pressure on the naira at this point. Do you think this dollar denominated assets also put some kind of pressure on the naira?
Okay, thanks. I think that what we saw, yes, we may say might have put some pressure on the naira. You are correct. However, you should also agree that you would also agree with me that it's important that investors also try to diversify their investments. If you exclude the investors, the amount of investments from the total activity, you will still see that it will not solve our problem. So the focus here is for retail investors that were willing to also invest in dollars, were able to hedge, because it's important. You see, the purchasing power continually erodes if you are unable to provide a bit of hedging for your investment or for your savings. So I won't say it actually impacted on you. One of the major factors that impacted on our FX this year is oil theft, which is a macro issue. So there was a reduction in the supply of FX, and as a result, CBN had to reduce supply. So I wouldn't link it to participation of retail investors in investment, in dollar investment.
Right. All right, Mr. Ebro, everyone's looking into 2024 now. I'm sure investors are trying to find out where to put their money going into 2024. How do you advise investors should position, at this time to get an efficient portfolio going into 2024?
Okay, thanks. And whatever portfolio I'm going to also give now varies because investment objective differ, the risk appetite also differ. But when we look at just on the average or on the balance of factors, fixed income will still carry the day. So speaking to retail investors, first of all, fixed income, try to shift more to commercial paper. You see commercial paper issued about close to a trillion this year. And we also saw that more funding for the manufacturing sector, followed by financial services. So we believe that there should be continued interest in commercial paper. If you do about 20-30%, then you can also look at FGM bonds, which they are all fixed income. Dollar denominated asset will also, you need to also have investment spread there, maybe about 20% of your investment, because a lot of Nigerians also have dollar obligations. So for matching, you can't be saving in naira to fund your dollar obligation. So you need to have investment in dollars. Then equities, while we've seen significant rise in some of the stocks, this will only be for long-term investors. We don't expect that there will be significant return as we saw in 2023 in 2024. So it means that there should be less investment. We should be less cautious in investing in the equities market. While we expect, yes, performances may still be positive, but there should be a bit of caution in investing for short-term investors. And lastly, alternatives, which will involve real estate. We believe with the stability we are seeing in the economy, yes, consumer wallets are currently being squeezed. But for those that are really exposed to low-cost housing, we believe that within that space, there will continue to be availability of opportunities within that space. So, by and large, if you look at, you need to be properly diversified. You need to understand your risk. But it's important that you don't leave idle funds, because that's also what really affects Nigeria. Looking at inflation rates, if you have left 1 million naira in the last 1 year in your bank account, you would have lost about 280,000 naira. That means the ability of what it can buy will be just about 770,000 naira. So it's important that you don't leave any idle funds. Look
Right.
for opportunity to continue to earn return on your investment.
Right. No idle funds. I guess you can say idle funds are the devil's workshop. No, I don't know if that works for for that, but I guess don't stay in cash at this point. Thank you so much. It was great having you, Mr. Odeji Ebro, MD Optimus by Afrinvest. Thank you so much.
Yeah, thanks for having me and have a great day.
You too.